Media outlets have now called that Republicans have taken the majority from Democrats in the U.S. House of Representatives in the U.S. midterm elections, while Democrats maintain control of the Senate, creating a divided government. From a market perspective, the size of the Republican lead in the House, which is well short of the red wave many expected, is less consequential when legislative gridlock results either way. Investors are likely to be satisfied by divided government, with several implications worth exploring. Let's take a closer look. Historically, equity markets and the economy have performed well after midterm elections. A new Congress has tended to pass legislation to spur economic growth, with administrations supportive of those initiatives to help prospects in the next election. Markets also appreciate the certainty of outcome that follows election cycles. This time, the midterm elections are likely to result in legislative gridlock. The increasingly narrow set of shared priorities by Democrats and Republicans means Congress is unlikely to pass much of consequence to investors over the next 2 years. Issues like windfall taxes on energy, movement toward government-led healthcare, and additional curbs on the financial sector will receive little attention in a divided government, allowing those industries to breathe a bit easier. A political risk factor we will be watching under divided government is the debt ceiling. The U.S. Treasury is expected to come up against borrowing capacity limits by the end of the third quarter of next year. Republicans may attempt to use the debt ceiling as a means to negotiate spending cuts, but with only a small majority in the House, it will likely prove more challenging. This may limit the threat of volatility around the debt ceiling later next year, and it's possible the issue is taken off the table during the lame duck session. This has clearly been a tough year for investors, though equity markets did well in the couple of weeks as investors seemed to price in a divided government. However, this did not occur in a vacuum. Politics matter, but in today's environment, the outlook for inflation, central bank policy, and the resulting impact on economic growth are far more consequential. Those are the factors we expect will be the primary determinants of performance going forward.